Hello and welcome to our financial update today. We're going to discuss the massive sell-off of the Nikkei 225 and the background of this dramatic event. We'll focus on the carry trade, interest rate policy in Japan, the rise of the yen, and the effects on the Nikkei 225. So stay tuned. Since Friday, the stock market has shocked every investor. Almost every index, whether it's the American ones like NASDAQ, S&P 500, Dow Jones, or foreign ones like the Nikkei 225. The Nikkei has experienced its worst sell-off ever. Some are even calling today Black Monday. In this video, I won't go into the American factors, but only focus on Japan-related news. If you want more videos about the American indices, write it in the comments. Japan was the main reason for the crash, and that's why the Japanese benchmark index was affected. The Nikkei was even 20% down for a short time. It has just recovered to minus 12%. Let's get to the reasons. The first point is the carry trade. A carry trade is a strategy where investors borrow money in a low-interest currency and invest in a higher-interest currency. Japan is often used for this. People borrow money from Japan and invest in U.S. bonds with leverage, which is safe and yields a lot of return. Or they invest with risk in the stock market and have a significantly higher performance. It's estimated that several hundred billion to trillions of dollars are involved. Today, this led to a snowball effect. Investors who had borrowed money had to repay their loans today, which led to a snowball effect. Many fund managers who manage larger amounts of money were also affected. The strategy would work in a zero or negative interest rate environment. Japan has raised interest rates by 0.25%, as you can see here. With a positive interest rate, it has shocked many in the market and many emotional decisions were made. If we also look at the Japanese yen, the currency has risen by 12% in a few days and is at a 6-month high. Due to geopolitical risks, some investors have found the yen as a safe haven to secure their money. The strong yen is also a problem because you need to buy more yen to balance your debts. Let's look at what everyone has been waiting for, the price targets. This should not be investment advice. Before we continue, I'd appreciate a subscription and a like. I have 3 scenarios with a bullish, bearish, and a worst case, so stay tuned till the end. The Japanese benchmark index built its bottom in 2008 and has experienced a very strong rise. The index is currently in my target zone. It's between 28,000 and 35,000 points. I've closed my small short position and am currently observing the market. I would advise most people to do the same. You should stay emotionally strong right now and observe. I would observe for a week until sentiment is saturated, or buy in with a small position. An ETF is very well suited for this. The target zone to the lower edge would still have a downside potential of about 8%. My wish would be for the market to recover and continue to rise. If the price breaks through the target zone, it would become unpleasant for every Japanese investor in the following months to years because they would quickly slide into double-digit minus. If the bullish scenario occurs and we rise upwards, it's very important that we break through the 45,000 point mark as quickly as possible to get confirmation that we are indeed in the bullish case. If it breaks through 45,000, we could reach points of at least 55,000 to 65,000 by 2025 to 26. Let's look at the worst scenario. The alternative is that we break through the target zone downwards to at least 22,000, which would be a downside potential of 28%. But if investors have to settle their debts and the yen continues to rise, then we could even see a sell-off of 45% to 65%, which would be between 10,000 and 17,000 points. This scenario would also be proportional to the other indices, only that the Japanese index would correct twice as hard. There's still a third, worse alternative where we would fall below 10,000 points and down to 3,000 points. This would be fatal, and it's very unlikely that we would get such a sell-off. It would be a sell-off of up to 90% from today's prices. For such a scenario to occur, a currency reform would have to come. Now let's look at the long-term view. If the Nikkei recovers and the bullish case occurs, the index would reach my target zone in 3 to 5 years. From today's prices, it would be a potential of at least 125% to 250%, which would correspond to between 70,000 and 110,000 points. which would be an above-average return. In summary, we see that the entry of interest rates and related problems are worrying many investors. The future prospects depend on various factors, including the development of financial policy and global economic trends. And yes, thank you for watching. If you like this video, give us a thumbs up and subscribe to our channel for more financial updates. Feel free to leave us your comments and questions. Until next time.